Morning, everyone. Um, Welcome back to another um, review of the Auberstrategy, where we look at what the market did in relation to the analysis that was posted last week. Sorry, I'm a little bit late this week with the review. I was actually um, out of town on a trip with my family, so um, I'm just getting some time to be able to do this video. So better late than never. So let's get into it. God, we just thank you again for your blessings and for your goodness. Thank you again for another opportunity to trade. Thank you again for another successful week. We pray that you'll be with anyone watching this video. May it be instrumental in helping them to improve on their process and to develop a suitable and sustainable strategy. We thank you and we love you. Amen. All right, guys. So last week, the market did exactly what we spoke about, where it continued to make higher lows to higher highs. So I'm going to go real quick and I'm going to show you exactly what happened on the 1 hour time frame. Remember, I mentioned to you that the market is bullish, 100% bullish. And what that means is that all buys are generated from the higher lows on the market on the largest time frame and terminate on the all-time high or the higher high before any kind of retracement is being done. Um, I also mentioned to you that when you take your largest higher lows, if and when the market goes up and creates only a lower high, that means that you're supposed to take your profit and then wait for your next higher low. And we saw all of that playing out last week. Okay, so I'll go day by day. I'll try to make this as short as possible. As you know that I'm doing the US30, as I explained to you in last week's video, that because of me changing brokers, US30 actually aligns real closely with what my broker actually does. Not to change anything, all US indices are 100% bullish. They all trade from higher lows to higher highs, and the strategy applies right across them. Okay, so let's get into it. So we saw Monday, market actually gapped up at the open. Okay, so this trade that was being held from the previous week was, continued to be in profit. Okay, gapped up, it made a high, a new high, which was an all-time high for last week on Monday. Okay, it retraced, came down, made a higher low. This was your entry. So of course, when you are here, this is where you'll be taking your profit because it's an all-time high. Notice, all-time high. Okay. You take your profits, you wait. Market came back down, it made another higher low. So this was your first entry on Monday. If you did not hold a trade from Friday, this is where your first entry would have been on Monday. This higher low. Market came up, broke all-time high again. This was the new all-time high, which was a higher high. Okay. Now remember, I'm on the 1 hour time frame. Market came down. Of course, you take your profit here. Market came down, made a higher low, came all the way back up, made a higher high. Okay. Take your profits right here. Market came back down, made a higher low, went back up, made another all-time high. Take your profits here. Notice, remember, like I said to you, if you're not comfortable taking sells, if you don't have a strong strategy, you wait. That is why I stress the importance of waiting. Do not try to sell a market that's bullish unless you know exactly where your support levels are. That's why you wait. So you take your profit here, you wait. Market actually sold right into the following day. So this is 1, 2, 3, 4 days of higher lows being made. Now you may say to me, well, market came down and it made a low right here. Well, remember I mentioned to you that on the smaller time frames, in this case, the 1 hour, you will have a temporary breaking structure to fulfill a higher low on a larger time frame. So let's mark this and let's check it. Okay. So here we are. This is the low that was signaled first on Wednesday. Then it came up, got rejection, came back down, extended that low. Okay, that low finally landed. Let's look at the 4 hour. Start with another time frame. Oh, yes. So it actually started with the 3 hour, extended to the 4 hour. Okay, and that actually continued that extension throughout the week. So you saw here that your 4 hour time frame actually continued with that higher low towards the end of the week. So going back to your 1 hour, this low right here that was created only translated to, and I'll just do the backtest tool so you're able to see what I'm talking about. So if we start here, move the backtest tool to here, you'll see here that we have a higher low. Let me just remove these lines so you can see it. Okay, that's your higher low right here. All right, so that that smaller time frame that was at the low only translates to a higher low on your larger time frames. Okay, so let's get back out of this and let's go back into what we're talking about. So here we go. All right, we're back on the 1 hour time frame. So this low right here was the next higher low. You take it up. Notice what happened. Market came up, it only registered a lower high. Look at your 2 hour also. Only registered a lower high. Remember I said to you, once you came in on your largest higher low and the market goes up and it makes that lower high, you take your profits and you wait. Okay? Going back to the 1 hour, look at what happened again. Came down. Right here, it made another higher low. Okay, remember, consolidation points. Lower highs, higher lows, lower highs, higher lows. Those are consolidation points. It's consolidating between the last high and the last low that was made. Okay, clear consolidation point here. However, you have another higher low. So you took your higher low right here. Notice market came up, made another lower high. Guess what? Lower highs tell you that you take your profits and you wait. So took your profits right here. This was Friday. Market came down. It made a lower low on your 1 hour and on your 2 hour. So I'm going to move this over just so we see exactly where that is. So if you look at your 2 hour, you'll also see a lower low, the lower low being formed right here at 1 o'clock on Friday. Okay, guess what? That lower low only translated to a higher low on the larger time frame. Now remember, we saw earlier in the week that the higher low started to be formed on the 4 hour time frame. Guess what? It extended because of this consolidation that was happening between the last high and the last low that we saw on the 1 and the 2 hour time frame. This only translated to a higher low because of that lower low that was registered on the 1 and the 2 hour. So 1 hour, lower low. 2 hour, lower low. Okay? Now, this higher low on the 4 hour, those of you who have access to the premium versions, you will see that this lower low and this higher low on the 4 hour carried right through until the 20-hour time frame on Friday. Okay, so here we have your biggest time frame with a higher low on Friday being your 20-hour, which of course, if you have the lower version of the plans, it translates to a 4 hour time frame. Okay, now remember I said to you, every time that you see a higher low, okay, if you want to know the direction of the trend, just look at the last 2 points. Well, your last 2 point was a high, last 2 point was a low. Okay, here you are on the 20-hour time frame. Okay, all right, let's say you only have the 4 hour. How does that apply to me? Well, if you go on your 4 hour time frame, this is the higher low. Excuse me, your last 2 points are a higher high and a higher low. So that clearly tells you that the market is still bullish. Okay, all that sell that happened last week was only a temporary retracement to create a higher low on larger time frames. Okay, so on Friday, the last entry should not have been a sell. The last entry that you should have taken based on your largest time frames would be another buy because the market ended at a higher low on your larger time frame. Okay, the other thing that I wanted to mention to you guys is that Friday was also the last day for the month. Okay, which means the monthly candle. So let's go to our larger time frames. Zoom this down. So that means your monthly candle, the monthly candle actually finished, okay, expired on Friday. So your monthly candle expired, your weekly candle expired, your daily candle expired, and every single candle below that expired on Friday at 4:59 p.m. or 5 p.m. Okay, that was it. So which means the next time the market opens, it's going to be a brand new candle starting from the month all the way down. All right. Now, with that being said, if you look at your 2-month candle, okay, your 2-month candle also expired. 2-month candle also expired. So do the same thing. Look at your last 2 points. Last 2 points were higher low, higher highs. Market is still bullish. If you want to go up, let's look at your 3-month candle. The 3-month candle actually still has 1 month left to go. 1 month left to go on your 2-month, on your 3-month candle. And notice on your 3 months, you have not even started putting on points, and yet still the market is actually going. This clearly tells you that the market is bullish. There's nothing on this candle here that tells you that this market is bearish. Okay, let's even go up to the 6-month candle. More of the same, higher lows, higher highs. Okay, let's look at your 12-month candle. This is the 1-year candle. Now, for all of you people who are talking about crash on NASDAQ and the biggest crash you have ever seen, like I mentioned to you guys, it's all about reading the data and understanding the data. This is the 1-year candle, which means this candle, all of this candle here, takes 12 months to actually be formed, which means in your 12-month candle, you have 1 month left to go, and nothing has even been signaled yet on your 12 months. So I don't understand why people are saying that the market is bearish and they're expecting a sell that does not exist anywhere. The data does not support it. Okay. So again, this is just zooming out just to show you the bigger picture. Okay. Going back into the grand scheme of things, here we are. Market finished on Friday, although it finished at a high on the 2-hour. Remember, your 2-hour in this case is not your largest time frame. If you look at your 3-hour, the 3-hour still has not signaled anything yet, and it's coming from a higher low, and it expired on Friday, which means you look at your last 2 points, you'll see higher highs, higher lows. This market is going. All right. So that was just basically, what happened on the market last week. As you can clearly see, the data is there. A lot of people actually took sells last week. A lot of them got trapped. The market does the same thing every single week. Okay, it makes a high, it makes a low. In this case, you see that the market is 100% bullish, which means it completed its higher high, retraced, made its low, higher low, and then it's going to continue to make another all-time high. So remember, Mondays, Tuesdays, Wednesdays, and sometimes Thursdays are the days that the market actually takes to do the retracement that's needed on the market. Very good. Yeah. So that's usually the days when the market actually takes to do the retracements, which is actually what we saw last week. So again, to see all of that data, you look on your smaller time frames. Look at your smaller time frames. So in this case, your 1 hour. And all you saw here was higher lows to higher highs, higher lows to higher highs, higher lows to higher highs. As soon as that higher high was made for the week, what happened was market retraced, came back down, broke structure temporarily on the 1 and the 2 hour time frame. Once those structures were broken, it actually, once those structures were broken, it actually made that higher low that you saw on the 4 hour. And then after that, you notice that the market actually started to move in the direction of the all-time high again. All right. So that was it for last week. The analysis, those of you who followed the analysis, congratulations to you. Those of you who were patient enough to actually trade those higher lows to higher highs and not get caught in those sells, congratulations to you. It means that you are learning. So just be patient and just understand that this is a marathon, not a sprint. Also understand that the more you practice, the more you journal, the more you backtest, that is how your strategy is going to be actually made stronger. So congratulations. The next video that I'm going to be posting is going to be the analysis for the upcoming week. It's the start of the new month. It's the start of the new week. It's the start of the new daily and all the other candles before. So you really don't want to miss that analysis for this week. It's going to be the final, well, the second to last month in the year. After this month, you have 1 month left before those candles expire. So have a wonderful day, guys. I'll see you in the next video. God, thank you again for your blessing and for your goodness. Pray that you will continue to be with us and help us to continue to be successful in our trades. We thank you and we love you. Amen. All right, take care, guys. See you next time. Bye-bye.